Hey everybody, welcome back to another live market update with the team from tradinganడింvesting4u.com. Just remember, this is just general advice only. We didn't take into account the needs of investors or the financial situation of you guys when we made it. It's only general advice on what we're seeing in the market at the moment. So let's get into it. What I want to do today is have a look at Facebook's earnings result. It came out last night, and as you can probably tell with the big thumbs down picture there, it failed to satisfy. I also want to look at Europe again just quickly. We spoke a lot about that at the beginning of the week, and I just want to tie up some loose ends and have a look at what went on the last couple of days. Just remember, if you're looking at this on YouTube, we have a few great educational links for you guys to take a look at. And also remember, we have our blog here. We have our free video with the 3-step amazing entry point system from our trader. And let's get into it. Europe and Facebook. Well, what happened with stocks last night? First of all, well, we had a bit of a rally to the high side. We had the S&P, the Dow, and the Nasdaq finish 1.6% and 1.3%. So nearly all of them finished up over 1.5%, with the Nasdaq just finishing down at 1.37% ahead. So very positive, I guess, over what's happened for the last few days. Even in Europe, we saw Spain go up over 6% last night. So let's have a look at that. What happened? Why this sudden turnaround? So remember, at the start of the week, we were talking about Greece, we were talking about Spain's ridiculous debt load and their borrowing costs, and maybe Greece was going to be thrown out and all that kind of stuff. So what's happened to change things? Or has it actually changed? I guess that's another question. So we had the European Central Bank president. He was over in Greece for a couple of days, looking at how they're doing and what's been going on. And last night he basically gave a big speech to the world. And it was one of those speeches where he didn't directly say what they're going to do, but he gave a couple of famous hints. Okay, now these hints obviously, transcend into impacts for the markets. We see it with the Federal Reserve and Ben Bernanke, and we also now see it with the European Central Bank president. So basically, what he hinted that he was going to do was he was going to start targeting these high-yielding debt bonds, which they haven't done in the past. So obviously, we spoke about Spain and their 7.5%, borrowing rates. My interpretation here is that the ECB is now going to start buying up some of these bonds, and thereby hopefully pushing down the prices of some of this debt, and that's going to help Spain out, obviously, because they're obviously going to be able to borrow money at a lower cost and fund some of their huge debt load that they've got. So, investors kind of took this as an indication that there might be some unity now across Europe. There's going to be a unified approach to solving this Eurozone crisis, because they've never taken on these high-yielding debts before. It's obviously considerable risk to these high-yielding bonds, and their decision to really target those to help out places like Spain and Greece and Italy and whatever is a new direction, and it does show that they're hopefully going to take things more seriously. But still, what does this actually mean? Because there have been hints before. I mean, remember the summit we had a few weeks ago that came just in the nick of time when things were looking down the barrel in Europe, and everybody came out unified into the summit and said, okay, we've reached these agreements and we're going to have these new policies. I still don't think these policies have actually been put into effect. I don't even know if Spain's actually got that bailout for its banks yet. So is this going to be the same case with this particular hint from the ECB president? We'll have to wait and see. There hasn't been any real, decision about Greece. There's been lots of hints and innuendos, but it seems like Greece is going to be staying in the Eurozone, and it seems like the debt that it owes is going to be reworked, rejigged. There's probably going to be some more terms and conditions for Greece, but it looks like the ECB is really going to focus on keeping Greece inside the Eurozone. So that's what's happened. That's why the markets went up. Investors were satisfied that hopefully there's going to be a big unified approach now to fixing this problem. Will it actually happen? I don't know. We'll just have to wait and see over the next couple of months. But certainly from the past, And from my impression anyway, it seems like these guys always come out just in the nick of time and give a little bit of a hint that something good's going to happen, and the follow-through isn't usually there. I hope I'm wrong, but we'll see. Anyway, let's move on. What's going on with Facebook? So these guys came out with their first earnings result last night, and it obviously failed to satisfy investors because their earnings price got absolutely slammed. I think after market they were down, after our trading they were down nearly to $24, I think. So it got absolutely slammed. Why did it get slammed? Well, obviously, firstly, the earnings results failed to satisfy. It didn't make as much money as everybody had hoped. Certainly not as much as a $100 billion valued company should be making, I guess. And all of this advertising revenue that was supposed to be there, was anticipated to be there, simply wasn't. And the reality is, it seems that Facebook has not been able to really capture the mobile usage in terms of advertising. Obviously, there's a huge increase of mobile usage globally, and Facebook just hasn't really figured out how to monetize their users using these mobile devices. So they really haven't been able to get advertising out there for their mobile Facebook sites and their other companies to really drive and capture this new revenue stream. And that's basically what investors were expecting to happen, and it just didn't happen. So obviously people were very disappointed with that. But Facebook also didn't really give any indication of what they're going to be doing the next quarter. So investors were kind of left in the dark there, and they were really hoping for some kind of input or some kind of hint as to where the company was going to be focusing, some details about where the revenue is going to come from the next quarter. They didn't get it, and the hopes of investors were dashed, obviously, and that obviously translated into the stock price, which got absolutely slammed. So that was very disappointing for Facebook, disappointing for Facebook investors, because that stock has just tanked ever since it bolted out the gate, really, hasn't it? And unless they can focus on that mobile revenue and really monetize those mobile users, it doesn't really look like, the dream of the big Facebook profit drive for investors is going to play out. So anyway, that's what happened with Facebook. We'll have to see what goes on with Europe, guys. Hopefully the ECB will make good on this hint. Certainly it wasn't a promise, it was a hint. But if they do start focusing those high-yield bonds, I think that will have a positive effect and hopefully begin to move things in the right direction. Still, does it help the underlying cause of the problem? Does it help the countries at a basic fundamental economic level begin to provide growth and drive growth and get the earnings they need to pay back this debt? No, I don't think so. But we'll just have to wait and see what happens. So, thanks a lot for listening, guys. Once again, if you're on Facebook, please remember to take advantage of our different educational links there. I hope you have a great day. I hope I get to talk to you again soon.